Are the reason for all of your success, and you are the reason for all of your failure. Full stop. How can you lead a team if you can't lead yourself? If your life depended on whatever it is that you're doing today, right? Would you go about it differently? Did you leave it all out there? Because anything worth doing is worth doing right.
I've got this right. I'm maybe just doing it wrong. That's the bigger, greater definition of focus for me. If you're the most determined person, but you have no idea what you're doing, hard to succeed. If you're the most focused, but you give up easily, what's the point? So to me, focus includes getting rid of the noise.
Morning. So that was fun yesterday, huh? And potentially, and I say potentially, I mean, we're not out of the woods yet, but potentially the biggest head fake in the history of like the last 8 minutes, but we've had bigger head fakes. But anyway, yeah, we'll kind of ease into this, give people an opportunity to log in. I'll start with, as we approach the 8:30 data, going off memory, I think we have Philly Fed and claims. I mean, certainly have claims. Philly Fed and claims, leading indicators at 10. Tomorrow, market closed. Monday, no data. Tuesday, Wednesday, Thursday's the big day. So let's just talk about the overnight, which really doesn't matter. But I'm just kind of stalling here as we get to 8:30 and allow for some other folks to join. Overnight, not a heck of a lot going on. Nothing here that's going to really move a market. A couple rate decisions. Rates were held steady. Bank of England. That's the big one. If anything, held steady. We'll sort of pull up what their thoughts may or may not have been. Bitcoin off a bit. Looking at the markets. Asia overnight, largely better, but mixed. Europe, similar, maybe just a bit more mixed. Here onshore, rallying, volatility down. Oil, not down huge, 70 handle on both. I think that's important. And if you don't know why I'm saying not down huge, it's because we formally signed this agreement last night per both sides. Precious metals down more than gas and oil. I find that to be interesting. Let's just look up Bank of England here real quick. CNBC is usually a paywall. So let's see if BBC's not. This is, by the way, right out of the gate, right, is I think more what we wanted to hear from the Fed yesterday and didn't. More on that in a minute. But held rates steady based on the uncertainty of energy prices. Recent drop in prices were encouraging. By the way, we may be sitting at 420 odd, 430 on tens if War said this, right? This was, I think, what we were hoping for, assuming that everybody's hoping for lower rates. As I've argued, I'm not necessarily in that camp. But nonetheless, this I think is what we were really hoping for. The policymakers said that oil prices remained higher than before the conflict, considerably volatile. Inflation expectations by the end of the year were now lower than the bank had in April. Again, everything that we discussed that we would have sort of hoped and or expected the Fed to say yesterday. And this was similar. Make sure, that inflation, doesn't remain sustained. Let's see if anybody else, I mean, that says it all, kind of a waste of time to look anywhere else, but see if anyone else had a different opinion on what they said. They need to continue. So there's a little bit more hawkish. Need to continue to address above inflation target levels. 2 dissenting votes for a hike, similar to what we saw with our Fed last month. Again, though, more talk around inflation being conflict-driven, oil-driven, sort of worst-kept secret. Their kind of inflation numbers were cooler than expected. By the way, same here, if you remember, or at least as far as I'm concerned, certainly on a core basis. So, yeah, long story short, Bank of England was a bit more closely aligned with, I think, what we were hoping for here on shore. Now, let's talk about the 8:30 data here. Again, not really the highlight of the day at this point, as far as I'm concerned. Certainly can help. Philly Fed 53.2 up from 47. That doesn't help. Continuing claims revised down a bit, hurt, but missed help. 1810 versus 1800. Philly Fed headline, by the way, the 53 were prices paid. Don't like that. Headline jumped from negative 0.4 to 10.3. This has always been a volatile number. So, it was pretty much on the screws. Claims revised up 229 to 230. We expected 225, came in at 226. So while down week over week, you have an upward revision and a miss or beat in terms of it being good for bonds. We're extending the MBS rally a little bit. We are, sort of back at, their 5-day chart is all messed up. June 16th, 98.31, we're 14 ticks off of Tuesday's level. About a half a point. I think at our worst, we sold off about 3/4 of a point. Sort of stands to reason why we're up 8 ticks. That's a 1/4 point. So these levels aren't terrible. 6s and 6.5s aren't terrible. 5.5s are sort of in the vicinity. I'm seeing us up anywhere from 6 to 10 ticks kind of across the board. The real miss, now we took a long position. We didn't cover yesterday afternoon after the sell-off. In fact, we got close to lifting a bunch of coverage, kind of kicking myself that we didn't do that. Absent of signing this deal, I felt like there'd be an extension here in this sell-off, and there likely would have been. We'll never know. One wonders, right, we were talking about signing this memorandum of understanding. So let's just, take a step back. I don't know. It's a deal. It's a memorandum of understanding, like the precursor to a deal. I'm certain that was scheduled for some time tonight, right? So one wonders, and I keep saying this, President Trump is like a deal maker, and he as a salesperson, he's aware of psychology. I don't know if you caught this yesterday, but they asked him about the decision and he was pretty restrained, right? He's like, I don't know. I don't agree with it, but I trust this guy. I'm wondering if that trust will be pretty short-lived. So let's just really talk about, sort of the elephant in the room. And all of a sudden, with this memorandum of understanding sort of signed, sealed, and delivered, right? Now the new goalpost, if you will, is the Fed, right? And so, or better maybe to be said, is how people digest the Fed. So if you caught my market minute yesterday, and if you didn't, either I'm certain that it's in this feed, or go to my Instagram, El Presidente _EPM. It's there for sure. I saw it there. The market is offside. Simple as that. I did not see yesterday's Fed as incredibly hawkish. I just simply didn't. And why you can't trust the market in the short run. We have become, and not to say that this hasn't always been the case, but similar to the evolution, or might want to say the opposite, by the way. But the evolution of and I'll get to that, Jay, in a second. The evolution of our financial markets, right? It's very lazy, right? It's very lazy. It's very short-sighted. And what that does for folks like me, what that does for folks who are, perhaps traders in an unrelated business, volatility creates opportunity. We like volatility, generally speaking. Okay. You guys don't, to whatever extent you guys are originators, which is the preponderance of the folks that consume this. We definitely have some cap markets folks on here, right? So yesterday for me, sort of no big deal. Like I said, we almost really, we definitely took on a long position. Don't get me wrong, but boy, I'm kicking myself for not lifting 10, 15, 20% of our coverage. I think that would have been a really huge, I'd be doing laps right now. Had I kind of had the nerve to do that. I just, these things, the market hated that yesterday so much that I just really was kind of betting that we would have a continuation. Anyway, yesterday's trade was lazy as far as I'm concerned. Okay. One, the dots indicated a hike in 26. I don't know, worst kept secret. We talked about this last week. I think we were pricing in something like a 98% chance that we were going to hike this year. And then there was something like 146% chance, if that's even possible, that there was going to be a hike in the next 12 months or whatever the math is. Or, I think there was like an 80% chance that there's going to be 2 hikes. And while, one could say that there were some Fed participants that did see 2 hikes, what I extrapolated from the dots is, and I talked about this, that this was a one and done. And I felt that was actually more dovish than our base case, right? I think another big takeaway we should have, and this is something that we need to keep an eye on, is that the Fed is likely going to be less transparent. And I kind of made a joke about this. I mean, you go back and look at the other statement, and it's like, hey, if the sun rises in the west and it's rainy on a Tuesday, and your grandmother burns the biscuits, we might do this if we feel that sort of thing. And like I said, the new statement is basically, who the heck knows, strong language to follow. And so the other lesson to be learned is the market doesn't like uncertainty above all else. And the question becomes, and as crazy as this sounds, yesterday the Fed was more transparent than they've been in a long time, yet at the same time, not transparent at all. And there were talks about this, talk about task forces and a new way of looking at things, and I think that they're, it's what were you looking to hear? I heard that, they're going to disconnect rates from some of the more antiquated methodologies previously used? And what if we have growth that's driven by productivity or AI, right? Well, that might not directly correlate to tighter monetary policy. Well, in a world that has seen 30 years of stagnation in terms of interest rates, 40 years up until COVID, to me, that's a welcome thought if you want lower rates. It's like, okay, when we get back to some normalcy, right, one would suggest that the things that led to a 40-year bond rally will return. Automation, information, these things are generally deflationary tools, or things may be better to be said. And while I've talked very extensively on how information has actually been turned inside out to be an inflationary tool, or factor, I still think in the long run, any sort of proliferation of AI is going to lead to a drop in prices. And, there was some talk about stubborn inflation. There was this promise of price stability, but he did decline to answer questions about the future and stuff like that. 8 members want to keep the range steady. 9 want to hike. One seat saw room to cut in the second half of the year. So let's just call that split 9 and 9. We're steady to a cut. Yesterday's sell-off was overdone, and particularly overdone in the face of an imminent MOU. What do you think about the jobs report and where rates will be trending? Well, when you say that, what do I think about the jobs report that we just had or the one that's coming in July? What I thought about the jobs report that we just had was it was harder to poke holes in that one than in previous ones. What do I think about the jobs report that's forthcoming? That I think is the $1 million question. I think that we have a bad one coming. The question is that going to be the report that hits in July for June, or we have to wait another month? At the end of the day, the bond market can't have it both ways, or maybe it can, but where I think that your bets, so to speak, should be now, today, after we've been through yesterday and this signed deal. If all we've been worried about for the last 3 months is oil, if all we've been worried about is the Strait, if all we've been worried about is this conflict, right? What exactly changed in the Fed yesterday? Nothing. They're going to be data dependent, whether they say it or not. The need for forward guidance it is unnecessary if you can read the data. And I would argue that if you were to create a ledger of all the hawkish things that he and they said and all the dovish things that he and they said, net, in the wake of this signed deal, where in front of our eyes, we are, as I said yesterday, potentially barreling, pun intended, towards a 60 handle on oil prices. When we're looking at a president who, didn't completely convince me that he's happy about the prospect of not cutting rates, right? And therefore, you would imagine he's going to do some things that he needs to do to try to put us in that position. It's hard for me to not say, what the heck are we doing here? It's hard for me to not say, we've gotten through the hard part, right? We just have to get our wits about us. Might take a round of data, right? That might be. By the way, what did I say? The last week and a half, 2 weeks, now's not our time. I'd lock everything in June. I'd lock early July. Let's talk about end of July, August. We might have to get through these data cycles. It is what we said it was going to be. And honestly, isn't that why you joined this? Isn't that why hundreds of you watch this on replay? I don't know that I get them right every time, but we've been pretty spot on here the last couple weeks. Yesterday was another really strong lock day. And hopefully you guys were all locked up for June going into that decision. But if you weren't, you didn't get killed thanks to this morning. And so that's how I'll leave you going into this 3-day weekend. We're off tomorrow. Markets closed. Right? Markets closed tomorrow? Yeah. I'm wondering, I know banks are closed, but maybe there's some weird thing in the markets. And no data on Monday is what I'm going to say to you is similar to where we were before this, 6.25 and up. I think you're in the lock zone. The levels are just fine. And why take a chance? Now that we know that the market the market's lied to us. They're not fully focused on the price of oil in this conflict. I think you continue to play protect at good levels up in coupon, and you're at good levels, 6.25 and above, right? And one wonders with this Class C roll, right? We have some room to catch up because we're going to absorb some of these drops, which were a little bit wide. Once you get to 5.75 to 6 1/8, you then creep a little bit more towards, say, a 50-50 proposition. I think if you were caught offside by yesterday, you may be, this is not a panic lock, right? We're up maybe 30 basis points off yesterday's lows. Maybe you relief lock that loan. I don't, yeah, and I agree, lock it if you like it. That's always what I say, and yesterday is proof positive of that. So to me, if tomorrow wasn't a holiday, I wouldn't mind you taking 5.25 to 6 1/8 note rate kind of day by day, right? But because of the effectively 4-day holiday with no data on Monday, and just knowing that the market is a little bit skittish, God forbid anything negative comes about on that MOU. We already know where we could go. So, I'm nearly 100% 6.25 and above lock. I'm 50-50, 60-40, maybe even 70-30 kind of relief lock, 5.25 to 6 1/8. And I'll say what I've been saying. If you're offsides 5 coupon and you've been offsides, at this point, I still don't think that you have anything to lose. So that's how I see it. Thanks for joining. You guys have a great long weekend. Although I know we're going to be working. I'd imagine some of you are going to be working. Kind of money never sleeps. Certainly nowadays. And thanks for watching on replay. Bulls and Bears make money. Pigs get slaughtered.